Okay, hi everyone. First of all, I would like to welcome you all. This is the last webinar of this year, 2022. My name is Ravi. I'm the co-founder CEO of Zeeve. Zeeve is a Web3 infrastructure as a service platform that has been, providing APIs, nodes, and various other pieces of Web3 infrastructure to all the Web3 startups. We have 15,000 plus users on the platform and more than 30 plus enterprises who are using the platform to manage their blockchain infrastructure. And today we are starting a new series of webinar where we would be discussing with the distinguished experts and leaders in the Web3 space. And what better way to start this series with one of the most distinguished leader in the blockchain industry who have come out of India, especially in the enterprise domain. I think there is no one who is not aware of what Prasanna has done in this space. I think he is one of the oldest in the blockchain space, as well as one of the most seasoned player in enterprise blockchain domain. So I would like to welcome Prasanna Lohar, ex-digital head of DCB Bank and now CEO of Blockstack and leading the India Blockchain Forum for this webinar series.
Thank you, and thank you so much, Ravi, and overall Zeeve team for bringing this series. And I'm fortunate to be here for this event today. Looking forward for our engaging discussion, which will be helpful for our viewers and listeners today. Thank you so much.
Right. So I remember meeting Prasanna in 2017 in one of the conferences in Mumbai. At that time, he was part of the bank chain engagement and various other initiatives. And the relationship started in 2017 and went a long way. In fact, I'm proud to say that one of the first production use cases in the banking system in India was done by us in association with Prasanna and DCB Bank. And that production use case is still live and running for last years, and it's going to continue to run. So it has been very interesting experience, working with Prasanna on quite a few use cases, whether it be in voice discounting, whether it be, on security and privacy side. And then, and the latest is tokenized assets. So let's start with few of the, I think, when blockchain started in 1718, there were lots of POCs and pilots being talked about. I remember there was a paper by World Economic Forum which talked about 5 to 6 major use cases in the banking industry, starting from remittances to trade finance, to co-insurance, reinsurance, and various other cases in the investment and capital market domains. So first, I would like to ask Prasanna that how has technology improved banking overall, not just blockchain, but and since Prasanna was the head of digital, handling not just blockchain, but IoT, AI, machine learning. So how has technology improved banking and rise of technology, within the banks, especially catering to financial institutions in last 10 to 15 years?
Yeah, I think the kind of a banking we have seen early 2000 and the kind of a banking today we are seeing, it's a complete landscape has really changed. Customer experience has changed. The number of channels have increased. The outlook towards bank is overall is changed. We could see banks are now getting supported by government, regulators, fintech companies. And I think the kind of a people we have seen in 2000 and now, there are different roles have changed in the banks. We could see chief digital officers or chief security officers and many more. I think technology has really helped to really bring on much more needed transformation. If you go back in 2000, I think branch banking was the only model available for customers to do banking, and which would take a lot of time. People were so happy with that banking also. But by the time there are other technologies coming into our life with the internet and the smartphones, the outlook towards any services, not banking, but any services has changed. Like customer experience, expectations have changed with the smartphones coming to picture or internet coming to picture. People have become more agile and more towards the banking and many other services. That at the same time, we could see how banks and the regulators coming into picture started with interoperable core banking, followed by interoperable ATMs in 2010. One could take out the money from any ATM. That was a magic that moment. Followed by NPCI, which is the RBI's company or a non-profit organization, has done a lot of changes in Indian context with many more backbones like IMPS, and we have seen how IDRBT is brought in NEFT, RTGS ecosystems. So I think banking has moved from traditional brick and mortar to digital banking with the internet, mobile, digital banking. Slowly, how we can see various platforms are coming into picture. Like in India, Aadhaar, UPI, BBPS, or we are talking about account aggregator. So under in India stack, we could see a lot of transformation happen since last 7 to 8 years in a banking ecosystem. So banking has moved from traditional to digital and to the slowly towards intelligent banking with the adoption of artificial intelligence or robotic process automation. So banks have started understood. So there is much more required to have a better operations as well as a better intelligence in the banking. So I think time will be more beautiful when we'll see many more technologies will come like 5G or metaverse and many more. You spoke about IoT. So will not be surprised tomorrow's customer will be devices also apart from customers. So let's look at how banking will change furthermore. It's going to be very beautiful, but I can say that the way banks have created platforms, so-called backend platforms or core banking or ledger banking or various public infrastructure platform, it will be easy to really adopt any of those new technologies. So I can say that we are moving now intelligent to autonomous banking because if you move or if you don't move, but people are becoming autonomous. They will expect same kind of experience the way other industries are providing to them, like in media, entertainment.
So till the time Prasanna joins in, I just recapture what Prasanna has been saying. Since I've been part of the fintech domain for the last 15 years, in fact, before joining blockchain, I was part of Biz2 Credit, one of the leading SMB lending platform in the world. So what we have seen in last 20 years, starting with PayPal, that banking has revolutionized a lot on the front end, where we talk about user experience. So now we can do pretty much all the banking as a user through our mobile app or web browser. But we'll shortly talk with Prasanna as to now the next. Yeah. Okay, Prasanna. Hi. Yeah. So I was telling everyone that last 20 years we have seen with fintech and techfin, a lot of front-end systems have been revolutionized. But as we have seen in last 3 to 5 years, still the back-end systems of bank, where we talk about the settlement times or how different intermediaries are managing the settlements or transactions or checks and balances, the ledger, etc. They are still not that updated. So what do you think we are going to see in next 5 to 10 years as far as the backend infrastructure is concerned?
I think very apt and very good observation, Ravi. The way I have seen banking account being opened in 30-35 days back in 2000, I was so happy. Wow, account got opened in 35 days. And if you ask our millennial customers, there is something called as account to be opened in 30-35 days, they will say, I think banking is not really happening the way they want. Now, if you look at the banking, how it happens, every process in the bank is documented and being authorized and signed off by all the stakeholders, typically business and typically compliance, security, audit office, and so on. And this process is submitted to the RBI as far as India is concerned. And RBI always comes back and asks how your operations are going adherent to this signed off process. Likewise, if you see, many of the process in the banks are being documented and narrated to the RBI, and it will take a lot of time to really change those processes. Because first of all, you have to change the documentation, agree upon that documentation, and prove that documentation really work with some kind of a proof of concepts, and then move ahead with the process. Right? For example, Zeeve has created one process for DCB bank, how to open a bank ATM. So there is a mandate by RBI. There has to be some kind of a digital transformation in the opening ATM process. So previously it was a paper-based process. Somebody will come sign it. Yes, I am opening. Apart from he's a subordinate, and the whole process of opening ATM was manual. There used to fraud used to happen. Now imagine this whole process is documented first. With that, we are going to operate on some digital locker onto ATMs along with the blockchain, and it was submitted to internal banking teams followed by RBI. And then after that we implemented. Now imagine the reconciliation and a settlement process which is going on since start of a banking everywhere, not only India but everywhere in India. And it is a proven process by saying that every day I will download some of those files, reconcile those files manually or with some application, and take out those outputs and again submit back those outputs to the relevant parties for actual payment. So on a client side, transaction may be on the spot, but there are a lot of challenges in the reconciliation. So reconciliation goes well, okay, fine. But if reconciliation doesn't go well, then there are additional dispute process or additional managing those transactions. So this is all about your payment reconciliation. Now in banking, there are more than 20-30 types of reconciliation. For mutual fund, for insurances, ATM cash reconciliation. So if you dig out in a operations unit of bank, you will find at least 300 plus processes which can be automated with the help of any of those intelligent technologies. So that is a view. So I think there has to be a right inclination the way we do a lot of innovations on the customer side. We have seen UPI, we are seeing account aggregator and so many other things. I think a larger inclination of RBI should be now on how do you really make a UPI kind of impact in the reconciliation or operations, so that we ease out the overall controls, ease out the overall cost overheads. So I think blockchain can really play a major role for revamping all that operational infrastructure.
Right. Yep. So since you have mentioned blockchain and the whole topic of this webinar is, how blockchain is playing a role in the financial industry space. So just a brief about blockchain technology in finance and your experience, how, different use cases within the financial industry where blockchain technology is playing a major role.
Yeah, I think, Ravi, if you see, we met in 2016-17 when we used to pitch DCB Bank's Innovation Carnival to the whole world, and where one of those use cases will be how blockchain can be useful. So I think while we are talking about use cases of a blockchain, it's very important to understand use case of a blockchain to the bankers or a regulator. So I think best part of a 2022, the journey which we have seen last 6-7 years, regulator and various supporting units of a regulator like NPCI, IDRBT, REBIT or IFSCA, another regulator, have understood power of a blockchain and the relevant technologies. Now, when you talk about the use cases, I'll go back in 2017 when we had started the bank chain kind of a consortium along with 36 members and 20 plus banks. So best part, at least some like-minded companies coming together for some set of use cases, where we formalize repository of almost 20 plus use cases like account opening or syndicate lending, cross-border payment, trade finance. You spoke about invoice discounting. There are many more use cases we'll see in a banking context where more than 2 actors or more than 2 companies are involved, or more than 2 units are involved, where we have to deal with some data, or we have to deal with how data is moving from source to destination. And the way you narrated, like some of those papers of World Economic Forum has really given a beautiful explanation about this use case back in 2016-17. I think since then, EBIC has started in 2018, which is the Indian banking blockchain infrastructure company of 16 plus banks, where they are talking about LCBG or trade finance use cases to be done. Or you talk about domestic LCBG or kind of use cases are done successfully pilot at RBI Innovation Hub. So in my context today, when we have done a lot of innovations on payment side, some of the key use cases for Indian context is having a decentralized KYC. Like today, if I open a bank account with one bank, right, that bank incurs somewhere cost around 5,000 to 10,000 rupees. And bank doesn't know whether that customer is really going to be active customer forever. imagine the same customer goes to bank B, again there is a cost overhead, followed by he goes to another insurance company, then it is a overhead for same KYC, same digital identity which he is carrying.
Absolutely.
Now imagine the decentralized KYC comes into the picture, which will be helpful for not only banks, but another regulators like IRDA, SEBI, telecoms, and so on. So we have single Aadhaar ID. We can really create another decentralized KYC on top of Aadhaar. That could be the one use case which will drive a lot of GDP for India. I think today we are talking about a retail CBDC, so-called digital rupee or a centralized bank digital currency, which will resolve all of those at least challenges around reconciliation settlement. While people talk a lot about experience for customer, which is being already solved by UPI, but in the back end, how can we really take care of those reconciliation settlement, where I think digital rupee or retail CBDC can really play a role. I think there are many more use cases like cross-border payment, where when we had to send the money to any of my friends or relatives out there in other country, it doesn't take on the spot. It takes some 3 to 7 days based upon the operations and based upon the process which are laid down at a SWIFT or any of those cross-border payment ecosystem. Likewise, I can say that wherever there are more than two actors involved, two companies are involved, like bank and fintech or interbank, or regulatory reporting to the RBI also, right? Or there are many more such process can really bring on at a smart automation with the help of blockchain. So we can keep talking. There are several use cases, I can say, Ravi, but attention today is that the stakeholders involved in all these use cases, they should understand blockchain is a foundational technology. It is not something like a smartphone app or something web-based app which can come and go live in 30 days, right? It has to have a right foundation. I can see that the way Zeeve has created a Web3 kind of infrastructure, right? I think led by those Web3 kind of infrastructure, bringing on right people together for one chain or one kind of a use case, do some POC, do the pilot, prove those results, and go for a large-scale implementation. Today, it will not take a lot of time, but the way we have seen journey of SBI doing one use case with Nepal, or ICICI with Emirates NBD, or S Bank doing with Bajaj Finance, or DCB Bank doing with Zeeve for ATM opening or vigilance processes, or we could see that how EBIC has formed, or how RBI Innovation Hub is supporting banks to gear up all these use cases, or how decentralized KYC is getting shaped with MITI, CDAC, or IIT Bhilai along with IDRBT. Technology is not a challenge, right? Use cases are not challenge now. Use case or finding use cases was challenge in 2017-18. Today we know which are those prominent use case where banking will change. But being it's a foundational technology, we have to give some time for technology itself to get mature. Today, the way like scalability, security, compliance, or interoperability, all those expectations for any of those banking use cases, same thing they will expect blockchain to drive in those expectations. So it will take its own time, but the pace is quite huge. The way we could see the companies or hyperledgers or R3s or are coming in life like Zeeve. I think these platforms are really accelerating agent. Without this platform, it's very uneasy to say that we will really adopt blockchain immediately. Yeah.
Right. Yep. So no, absolutely right. So I would divide the use cases into two parts. So one are industry level use cases, and as we know that most of the use cases of blockchain in the enterprises, including banking industry, are industry-led use cases, which weed out the inefficiencies or processes, improve the processes at the industry level. So whether we talk about trade finance or interbank transfers or intra-bank transfers, in all these use cases, we have seen in insurance, the whole co-insurance or syndicated loans in the case of lending. So these are all use cases where we talk about how industry as a whole, all banks coming together, having a new version of credit bureau, right? So how we can reduce the time of credit bureau reporting from 15 days to even real time. So that I think is well established now. It's a matter of how banks are going to come together, how RBI is going to help as a regulator to have these use cases becoming live or productive in the next few years. But one of the, so I was having a chat with one of the blockchain heads of the top largest bank in US. And one of the challenge banks always, face and they ask this question is, before all other banks come together and realize some of the use cases, what as a single bank I can do. So my question is, what are the different use cases at a single bank level that banks can at least start using
Yes.
to a small extent?
I think excellent question. The question rather it is a guidance, Ravi, for all the banks. How do we get into consortium banking kind of a use cases? If you really want to be part of these larger use cases where you could see that trade finance and many more, a bank needs to understand what is in my blockchain, and the stakeholders in the bank should understand how do we sign off any of those use cases done on the blockchain. Example, in a bank we have a development team, design team, followed by there are business units, and followed by there are auditors and risk officers, as well as security experts. So the way they do traditional banking and relevant mobile banking or internet banking kind of use cases, they know how to really sign off those things, considering many expectations around security or auditing, new software, licensing, open source, and so on. So it's very, very apt guidance for any bank who is listening us today, that do some of those internal use cases. Now, which are those use cases we can do? For example, we spoke about this ATM opening use case, which we did with along with the Zeeve, where the process, the manual process we revamped, wherein a branch officer and his subordinate can generate the one-time combination password on the spot on the mobile or on a web address. The whole process of generation of password, using that password, expiry of a password if it is not utilized in 30 minutes, and followed by actual opening of that locker on the ATM. The whole process we have done on blockchain. Through this process, our card unit and the ATM unit, security experts, auditors are now aware how to really sign off any of those blockchain use cases. Because in this process, they will validate which software we are using, whether it is Hyperledger or any other enterprise blockchain software we are using, why we are using, when to deploy that software, what all those prerequisites are required to build a web or a mid or a backend blockchain apps. So I think that's how it's very, very important. Go for a smaller use case within an enterprise or within a bank and to move ahead. Other use cases in my guidance, I can say that there is a process of observation or to do the inspection of the mortgages for which we are already given a loan. Whether that mortgage is still there, whether that tractor is still there, whether it possessed with that same guy who has taken a loan or support. So the whole process wherein this guy, right, who is our inspection guy, typically he's a third party. He goes on the spot and do some kind of a manual work, come back and happily say that it is still there. And sometimes it happens that NPA kind of a cases appears, even if this process has been taken care. Now, what we tried to do at a DCB bank, the whole process of inspection, along with taking the photograph of the borrower, followed by the mortgage, and along with the geotagging, along with the right stamp, and we put it on a blockchain. And we explain this process to the internal compliance and auditor who indirectly report to RBI. So what does it mean? They were so happy to see that we are now connecting those dots, and the controls which are being laid down by RBI for this inspection process immediately comes down, right? When it's on blockchain, it immediately comes down, and people in the bank also aware this could be the way to look at it. So another thing which I can say about employee joining process. Employee does join and we have seen during COVID or pre-COVID also, employee join with a lot of expectation. At the same time, once he joins, immediately he quits. Most of the time we see that, right? So how do you really have a better sanctity of employee data, and how do you create a digital identity of employee? This is something which we did along with the human resource department. If this whole use case can go to the multiple banks, so we could see how positive impact could be at least there for a bank side. We need to see the compliances around that, employee relevant compliances, etc. Then other use cases, which is like within a bank, we have a process of SME lending or SME financing. The whole process is so manual, and almost 9 to 10 units touch upon same file. And there are some manual interventions. Sometimes we see that the file is lying for 10 days, 15 days, right? So although we could do this whole process at existing web stack, similarly, how blockchain can bring on that traceability from one hop to another hop could be the another use case. Another use case we spoke, we were dealing with the internal audit, where every audit department in all the banks being asked to do some kind of a transformation, digital on the internal audit process. Now this internal audit does the audit of every department, 20 plus departments. Imagine they have to cover this audit within 1 year, right? So what does it mean? It means that they have to hire many more people. They will have a lot of operations to gather the evidences against that exception. Exception is, say example, a branch unit level exception is that branch was opened at 10:30 instead of 9:30. So sometimes what happens on the email, people in the branch will say, yes, it was opened at 9:30 itself. So how do we capture these kind of evidences, or how do we tackle these kind of challenges? So what we created a process to capture all the exceptions at a bank level in one digital database. So these exceptions are captured before we raise an exception to those auditees. So auditees are not aware. Auditees are not aware how to really take care of this, and what happens through this system. Actual exception directly comes in front of them in the system. They have to log in and send out the evidences against that exception, and this evidence, etc., completely tracked on a blockchain. So right. Imagine this whole process of all those 20 plus business units under blockchain. There is no chance or there is no deviation around raising or giving those to any of those internal business units. I think likewise, there are inter-department use cases or a bank and fintech, right? Say individually banks are now talking with the fintechs, but the fintech possesses a lot of data, right? Now today, auditor or a risk officer or a CISO have to visit to the fintech's office or have to go through the complete infrastructure of that fintech company, which may not be on the cloud, and understand how the data is moving. Although we will agree upon on the paper that customer data will not be kept or saved out there, and only relevant data is passed on to the bank. How do we justify technically? There we can have a multiple nodes, rather one node at a fintech and one node at a bank side, where we have a sanctity of a data immediately on that node, and anybody without visiting can see what data is really available at any point in time. You don't have to choose a 1 day or a 6-month audit. Continuously, you will be able to really audit what type of a data they are capturing, because now RBI has laid down a lot of processes to safeguard the data around cloud computing, around banking with the fintechs. Example, in a video KYC of any of the banks has gone live with the video KYC in 2020, and we could see now many banks are now adopting. So out of hurry, out of enthusiasm, every bank has gone live with the cloud-based video KYC. What does it mean? All the video KYCs, the typical KYC is a custody of a bank. Now this KYC or video KYC was in custody on the cloud with that partner. So right. Immediately RBI come up with the guideline that this KYC has to be shared or saved onto the bank's premise, not there. So how do we do that? So as soon as the KYC is being created, immediately blockchain-based smart contract copies that KYC and push it onto the bank's database. This is what we did. Or eKYC says that now eKYC relevant component, where we put in Aadhaar number followed by PAN for name matching and all. See, this component typically used by many of the fintech companies now. Until 2020, it was very leisurely they were utilizing, and the whole Aadhaar ID number being was captured at a web application of those fintechs or a mobile application fintechs. Now banks are providing those SDKs or those connectors which are embedded into their web applications. So now more than 2 stakeholders are involved. At a bank level, we can really do these kind of use cases, where bank also have some agreements or alignment where some of the banks cannot issue insurance to their customers, so they partner with some insurance companies. Example, DCB was partner with Aditya Birla. So what happens, the overall process so manual that Mr. Ravi, being a customer of a DCB bank, will open an insurance at 2 o'clock today, but he will keep on chasing bank, when will I get my insurance copy? Because the overall process of giving money from Ravi's account to this DCB bank, and followed by at the end of a day reconciling all those entries of all the customers, preparation of one file, sending this file back to the insurance company, where insurance company, there is another man sitting there, will upload that whole file into their system and generate those invoice copies. And in between, Mr. Ravi is calling several times to the call center of DCB, where is my insurance? Now imagine, as soon as you put the money, and that money moves through some I would say blockchain offers that triple entry, right? So wherein it comes to the core banking of a bank as well as goes to the insurance company, and on the spot, just like UPI, you get a insurance copy, right? So I think these kind of use cases a bank should really look at to nurture internal stakeholders and internal infra teams or security teams and so on. So it's very easy for them to be in the game of larger use cases.
No, that's, I think, is an excellent guidance, because there are thousands and thousands of articles, white papers, guidebooks, which talk about consortium level use cases for banks and the financial industry. But if you talk about a specific bank, within the bank, since bank is such a large organization with many departments, multiple financial products spanning from deposits to investments to insurance, and there's a huge redundancy, whether having KYC being managed by different departments, to various processes where there are a lot of people who are responsible for different set of processes in a one large process. And we have seen that inefficiencies or lack of trust by just one individual within the banking process can disrupt the whole process. So yes, I think smart contracts, enabled use cases, RegTech, as Prasanna mentioned, in the case of regulatory and compliances, managing audits and some of the data, and then managing interactions or data integrity or data compliances whenever a bank is dealing with fintechs or insurance companies or any other partner. How to create a common shared ledger where the common data is residing in the blockchain ledger. Rest of the data can still reside in the legacy systems. So yes, so these kind of solutions need to be architected where a lot of value can be driven by blockchain tech within the financial industry. So Prasanna, one thing which has picked up in last 2 years. So there was a whole onset of NFTs 2 years back, and then there was a huge boom that happened in the NFT collectible space. And then of course since there came a point when the supply was too huge and the demand was too less, that that whole collectible market collapsed. But what NFT gave was a tech, a new token standard by which people started realizing that it's much bigger. Like the way with blockchain when Bitcoin started, and when Ethereum smart contracts came in, people realized that this can be used not just for peer-to-peer cash, but it can be used for other digital assets. Similarly with NFTs, now people are talking about real-world asset tokenization. So asset tokenization is something which has picked up very well in last 1 year. There are quite a few startups who are tokenizing real estate or mutual funds or bonds or carbon credits or solar farms, and quite a few assets. You can think of any kind of assets. Of course, digital assets being the lower hanging fruit, those are the first that people are running after. But then we are also talking about real estate and other tangible assets. So and I feel that the tokenization of real world asset is something which is bringing the public protocol space and the enterprises together. Till now, enterprises and the public protocol space has been operating in completely in parallel. There are different protocols like Fabric, R3 Coda in the enterprise space with privacy, permissioning, etc. And on the public protocol side, we are seeing open smart contracts and permissionless, etc., etc. But with tokenization, now we are seeing these two worlds coming together. So what do you think tokenization of real world assets, including institutional DeFi, how that is going to pan out in next 2 to 5 years as far as banking industry is concerned?
I think tokenization is one of the lethal or one of the transformation use case of a blockchain, right? So there are tokenizing of KYC, the one which I was talking about, a DKYC, where this is in a completely control of a customer. Customer can give a consent and then only it can be utilized by any of the banks. Or likewise, tokenization of assets, lending assets, in fact, right? Say example, we can tokenize, one of the use case could be like a gold loan. So gold loan, the way we give to the bank, and in case we are not able to pay as a customer, so there is a whole process of auctioning of that gold, where ultimately customer suffers. Where with the gold loan coming on to tokenization, where at least the customer will gain some money or whatever he has paid so far. So tokenization gives a lot of new kind of business opportunities. We have seen like fractional ownership of real estate assets, wherein people can start investing who don't want to own the real estate, but they want to own a pie of real estate. That could be the another business model on a sharing economy. So it will not remain only on real estate, but sports industry followed by various communities now coming up with the tokenization kind of a use cases. One of the use case which I am experiencing today is like the communities or spiritual communities where they have a lot of monuments, right? So these monuments are getting tokenized against some tangible assets. So it doesn't remain a non-fungible assets, but also with the fungible possibilities or fungible value adds. This becomes a very good use case for a tokenization where the followers feel like they also are part of this whole ecosystem. Or if you have seen some of the sports communities, right, or some of the sports clubs, now they are tokenizing some assets, and as well as they are bringing a lot of tokens to really, which are really helpful for doing any of those transactions within some sports events and so on. Like where NBA has done big exercises or a very good NFT kind of ecosystem. There are various European soccer clubs. They are also come up with their own NFTs, right? I think the way we have seen web economy typically in the last 20-25 years, the next 10 years are dedicated for a tokenization or a token economy. It's very, very important for every company to understand power of tokenization, the way they understood power of website and relevant web economy last 20 years. Here onwards, every bank or every regulator will bring on that kind of stuff. But I think it will take its own time for regulators. But I think eventually the way it is happening, as you said, real estate or sports communities, gaming industry, or media and entertainment industry, where there are a lot of challenges, right, in content creation and content publishing. So all these things we can come and really create a new kind of a mechanism. Rather, it is slowly happening. And as blockchain is there, the safeguarding of actual tokens and having or not having the right set of processes where sometimes man in the middle comes and hacking of those tokens or some kind of corruptions around token can be really safeguarded with the blockchain community picture. I think in a nutshell, what I can say that Ravi, banks know how to really use tokenization at RBI's fintech unit or RBI Innovation Hub. They are always welcoming this, or IFSCA, which is unilateral. They are always welcoming these kind of use cases. Now, real games will start with the adoption of a digital rupee, which is going to be a token-based asset, right? Today, it is backed by legal tender. Tomorrow, you can bring on any of your asset, which is backed by India token or something. That kind of initiatives will come. So, will not be surprised. Tomorrow, digital rupee will support some kind of communities or commodities which are backed by India token, and wherein we could see some examples of solar coin, where we can trade a solar energy on top of a digital rupee, right? So which government may not would like to know, but we can really really do those kind of a transaction, or some kind of a wheat coin, wherein we can do those transactions without a manual reconciliation coming into the picture, or in crop or agriculture, we can have this kind of a sugarcane coin or a milk coin. So I think we need to see how financial transactions are going to happen tomorrow on a tokens, and these tokens will be well backed by a legal tender. But at the same time, being that token ecosystem, it will really remove all those overhead of the extra reconciliation settlement, which is the ultimate aim of digital rupee. The aim of digital rupee is not to bring on a wow experience for retail customers or wholesale entities, but to see how in the backend we can ease out the overall or nullify at the end of a day on the spot reconciliation should be zero. So apart from banking, we could see many more sectors are now adopting tokenization. I think India may not be that active right now, but outside of India, many countries are also now coming up, like tokenization of lands or tokenization of real assets. So Switzerland or Sweden's or there are smaller countries are now adopting this kind of larger use cases to begin with. We have seen in Dubai how some of those properties are being sold on NFTs, right? Tokenization of real estates. There are some couple of companies in India giving that kind of a traction to have a tokenization of real estate. Rather, real estate agencies are also now bringing that angle how they can utilize blockchain and tokenization in this whole game. So I think it has really begun, but the way we couldn't anticipate power of internet in 1995, we should be part of that game immediately so that we'll prevail our existence or dominance in a tokenization. I think whoever will really do it immediately will have a larger game into the picture, but it will bring lot of equilibrium and it will take lot of pressure or control on regulated entities. So,
Right.
Because they will lay down all the process how tokenization should be done in Indian context, and communities or various sectors will drive that initiative at their end. At the end of the day, reporting will be taken care the way regulators are expected. But I think tokenization in many sectors it's unimaginable. You may today talk about some of those use cases, right? Like agri, entertainment, and so on. Ask those millennials, they will tokenize everything, right? They will tokenize their movements into the cab. They will say, I have sat here, so I should receive these many tokens automatically, right? So for every action we deal with any company, you will always receive some form of a tokens. One of the use cases, like if I am a company where I'm aggregating all experience for a customers, where I give some kind of aggregation for doing shopping on Myntra or any of the Flipkarts and so on, and again come back on this platform, I offer them this much token. And based upon the kind of a token they are availing or they have, I can always create an alternate data or alternate lending model. Based upon a token, I can offer them a small ticket size of a lending, and I can really assure that the way we have seen lending, that also will change with some kind of a tokenomics. Yeah.
No, absolutely. I totally agree that, one, for the benefit of everyone. So token is a digital representation of an asset over the blockchain. And, once you create a digital replica or representation of an asset using token on blockchain, then you get all the benefits of the underlying blockchain, whether it be, trustless transactions or consensus, how to write the data into the ledger. You have absolute ownership. So if you hold an NFT, you have an absolute ownership of the asset. So these are some of the tenets or benefits of having a decentralized ledger under the tokenization. Tokenization per se, we have been seeing for many, many years, whether it be a token being used as a royalty point or a token being used to represent money in casino. So we have seen the use cases of token, but now with blockchain coming into picture, of course, it takes it into another dimension. Now, Prasanna, as you mentioned briefly about the lending piece, so I think one of the low-hanging fruit which I see is the whole securitization market, where you already have a portfolio and you can tokenize the asset portfolio, and that asset portfolio can then be sold in the secondary market. So these are some of the new transformative new business models that are being driven by blockchain. One of the paper I wrote in 2016, now it is actually coming in with centrifuges, few players who are tokenizing invoice portfolio and then selling it into the secondary market. So this is something which is not there at all today in the traditional technologies. But with blockchain coming into picture, with NFTs coming into picture, invoices are actually being tokenized and then sold in the secondary market to wholesale lenders or other retail lenders or institutional investors. So this is very interesting, the whole tokenization piece.
Yeah, I think just to support, so I think this will become a business model for some of the companies, like the way we have seen mobile banking or internet banking, and the companies bread and butter today, some of the tech service provider companies only mobile banking or internet banking, likewise they sell. Tomorrow this asset-backed kind of ecosystems can become a service, right? And today it's some real estate, tomorrow it's something else, right? Or white labeling any of those assets. So I think that is a game altogether. So that kind of that's what I think. It is unimaginable to really see how we can bring on new business models. So new business model will bring on new companies, new roles or new jobs to the whole ecosystem. I think the concept of asset securitization is a very, very good concept, and it will ease out a lot of regulation controls on a lending ecosystem. It's a matter of adoption with the right process, right proof of concept, right pilots, and really bring on smaller then larger use cases for banks. I think some of the companies have started working closely with the SEBI and all, but let's see how the more and real traction should happen with the RBI coming into picture for this. Yeah, certainly we should see asset-backed securities are going to be very, very helpful to really ease out much more required securities. Yeah.
Right. So, Prasanna, you have been very closely associated with the e-rupee initiative of RBI. So, for the benefit of everyone, can you talk a bit about what CBDC is, what e-rupee initiative is, how it is going to impact maybe at the organization level, B2B level, or how, whether as a user, are we going to see the B2C part of it also?
Yeah, I think very, very apt initiative. We are talking about the CBDC since last 3-4 years, central bank digital currency, and the overall traction or overall agenda of a CBD is to bring on a global financial inclusion. Bank accounts or any kind of a financial institutional support as far as the 2017 fintechs is a concern. Apart from that, we could see the way the money moves from one country to another country or to emerging countries, right? So there are a lot of opportunities to really remove those man-in-the-middle kind of things. Within India also, the way we are looking at how every citizen will have a digital ecosystem availability as far as the finance are concerned. So these are all the aspirations in front of the world. So how do we achieve? So central bank digital currency comes and says that let's create a digital form of existing paper money. So which is the legal tender of a country called as a CBDC, and at a various country level it is called as a different names, a digital rupee or e-rupee at India, or yuan at China, or there are many more other e-krona at Sweden. So likewise e-naira at Nigeria. So I think many countries are being asked, rather BIS, which is a banking international settlement, which is a universal company or a regulator which is helping banks to really build on standards and build on experimentation of the CBDC, which is already started. And there are at least 10 plus countries are live doing some kind of a pilot transactions, like we spoke, like Sweden, Switzerland, Hong Kong, China, Cambodia, Singapore, Canada, and there are some African countries like Bahamas, right? So I think this has started back in 92, followed by 2014. So both the experiments have failed. But here onwards, as it has become a global attention under BIS, so BIS asked many countries to come together. We have seen like Embridge or Helvetica or these kind of projects where multi-country wholesale, how it will work, considering interoperability, considering cross-border payments. So these are the experiments are happening. So CBDC, in a nutshell, is a legal tender, just like complementary to your paper currency. But the way paper currency has its own operational overheads for printing, distribution of that cash to the ATMs, carry that cash to those ATMs, and relevant cash-based reconciliation, which we spoke earlier part of the interview, followed by the tracking at the cash, right? How the utilization is happening, who is utilizing what, there are AML challenges, there are challenges during the elections, how the money is being utilized, right? So overall, there are challenges around paper currency. So if a digital currency comes where the printing cost has gone and overall concurrently the overall operational overhead to manage that paper currency is also gone. Moreover, the type of CBDC is typically called as a retail or wholesale, where retail is typically between people like you and me who can do the transaction on UPI. So it can be same way we can do it transaction, just like the way I send or give a paper currency without bank coming to the picture. Same way we can do transaction in a retail CBDC or on a digital rupee, where you will be provided with one app or a wallet where you can exchange that token or exchange that e-rupee or a digital rupee without bank coming to the picture. So that is a retail CBDC part. Now there are a lot of transactions between bank to bank, right, where reconciliation settlement is involved. And say example, buying, selling those bonds, or sometimes one bank supports another bank to really maintain their SLR or CRR, right? So these kind of transactions keep happening day-to-day basis between banks. Now that also can be done with the help of a wholesale kind of currency or wholesale CBDC. So at the same time, we can do same transaction between one bank in India. Say example, DCB Bank can do with their another partner bank in US, Wells Fargo. So your traction around 3 to 4 days can reduce down to the fraction of second for a cross-border payment. So these are all those use cases. So for any CBDC, we require some steps, right? So like having right set of monetary policies. Step 2 is like which is an architecture, whether it is a centralized or decentralized. Or step 3 is what type of accounts you'll have. It is whether it is an account-based CBDC or a token-based CBDC. And ultimately, how do we utilize wholesale or a retail? So once we solve all these 4 steps, any country will have a better CBDC. And good to say that India is sitting on a very good infrastructure like Aadhaar or UPI, and there are many more digital adoption is already done. Now it is a matter of a creation of a right monetary policies, choose whether it is centralized or decentralized, where we have chosen decentralized mechanism, and choose those use cases like account or token based. So wholesale will be on account and retail will be on the token based, and then followed by whether it is a wholesale or retail kind of a use cases, where in India, I think on the retail side, 4 banks like SBI, ICICI, IDFC Bank, and Yes Bank are testing out a retail transaction among their employees with this wallet. To begin with, this wallet is created to pay the money from your UPI account. Tomorrow, right, you will pay or you will ask the money not only from UPI, because UPI is easy, right? So it is being already adopted. But tomorrow, I would like to fetch money from my debit card, credit card, my account, and that's how we take money within your wallet. And demonetization in this wallet, they have kept similarly the way we have a paper denomination. But eventually, that will also vanish. It will have a UPI kind of a fractional transactions we'll be able to do. But eventually, because just to keep equilibrium, we have kept same digital demonetization also within that wallet. So now wallet is now connected over a smart contract in the blockchain in the backend. It is not in the public which blockchain to be used for enterprise, but we need to see how scalability, compliance, and the interoperability of same CBDC can be done on the digital rupee out there. So very well concept note is being published by RBI in October, followed by immediately they have implemented wholesale, followed by retail. So that's the readiness ahead of a budget which we announced, and that digital rupee is going to come. But I think Indian digital rupee will be world class because we are sitting on a very good regulator. The countries who can make a very good CBDC should have a very good regulation and a robust regulator. RBI is likewise, and we will see how RBI will talk to other countries, other banks to do a lot of experimentation around wholesale. But it's a steady game. We should not be surprised that we will implement a retail CBDC within down the line 6-7 months. But to bring on a larger impact, it is not only RBI, but it is going to be SEBI, it is going to be IRD also has to come into the picture because they also deal with the rupee and some kind of a transaction. Right? I think it will be larger game, but government push is there, so ultimately it will happen. So we should not be surprised with some digital demonetization, the way we have seen demonetization back in 2016. So one fine day we will say we are ready and let's begin with the digital demonetization on a digital rupee. So it's good to see that how NPCI is driving for retail CBDCs, and good to see that how banks are already ready for this, because banks are already known for a blockchain adoption since several years. They know how to really sign it off. That's what I said, that experiments which they have already done internally, which is now helping to really go for a larger use cases. So I think we should see more. We may say another concept note by RBI for addition of how do we really adopt, and many more observations which we'll see in this retail and wholesale pilot. Yeah.
So now we are nearing the end of 2022. So what do you think in 23 and beyond? What banks are planning as far as blockchain is concerned? What prominent use cases you will see or initiatives that you see are being there?
Yeah, I could see decentralized KYC will come into some picture. PCR, public credit registry, which is going to come in the next year. We could see like or consent mechanism of account aggregator should undergo blockchain change, although it is not there as of now. So I think a larger use case will come on a blockchain, but eventually, in my view, we will not sell blockchain here onwards. What we will sell or what we'll talk a lot about use cases, because blockchain is a known for everybody now. What now the action traction for companies will to really come up with the use case, and every use case, any normal use case should have blockchain come into the picture. Always talk about trust, tokenization, and we'll talk about traceability in every use case. I think one of the questions we have seen that audit is happening within a bank. So why do we need a blockchain, right? So far, regulators controls are coming into our life since last several years. Now, all these regulations are because of Web 2. Bring on Web 3, your regulations will vanish. Rather, regulation will be eased out. So Web3 brings a lot of privacy controls. Web3 brings a lot of incentives through blockchain, AI, metaverse, many other ecosystems which are part of a Web3. I think Web3 infrastructure companies will come and really help to adopt use cases immediately. So I think adoption of a Web3 companies or a Web3 infrastructure companies in the banking will not be something like a rocket science. They already know now this should be adopted, and at a government level, METI level, at all regulatory level, they know blockchain is one of those prominent agenda which has already now inherited into the every ecosystem. So likewise, over a period of time, we will have some standard. Your system should have a backend layer with the blockchain and AI. The way a mobile banking or internet banking has some standards, it should have some audit mechanism. We should detect automatically some of those vulnerabilities. It should have a better experience. Similarly, blockchain and AI will be integral part of any of the core and core banking, mobile banking, internet banking, and not only banking everywhere, because it gives a lot of incentivization when we move our banking from this day-to-day traditional to digital to autonomous banking, where we need kind of a trust. Now, this trust inherently comes with blockchain and other AI kind of technologies. So, I think every company should start adopting it to ease out those controls, ease out that regulation. We should not say we have built it on blockchain out of innovation, but we should say we are built a system on blockchain or AI, which is a futuristic system. Today, we may not see that attention, but when we are land up in a 5G or 6G, everything will be autonomous. Right. Transactions will be spontaneous. When transactions will be spontaneous, we cannot have a backend system which are running on reconciliation settlement. Right? We need the overall digitalization there also, and blockchain gives that liberty to do that. So I think we will not talk about any technology, but we'll talk about all that automation which is required across all front, back, or mid. So I think that's how we should look at 2023 onwards, while we are entering 2023. So good to say that a lot of transformation happened during 1920 because of a COVID reason, followed by now everybody has moved to the different orbit itself. Now, when in this orbit, there are a lot of expectations from corporates, governments, and our end users. So to meet that, I think good to see that what more technologies we should adopt just like that. Yeah.
No, I think an excellent point by Prasanna. I would like to tell all the Web3 enthusiasts, anyone who is building something in blockchain within their enterprise, or any Web3 startup or entrepreneur here, that technology is an enabler and gives you a competitive advantage in the short run. But end of the day, business model should be based on what is the problem, what is the challenge that we are solving, what the solution looks like, and then having necessary compliance or stakeholders commitment to that. That I think is more important. Technology is always going to be there in underlying to it, but I think the more important part is to focus on the problem that you're solving. If you're actually solving a real problem, then you're slated for success, irrespective of how you are using the technology underlying it. So yeah, with that, I think we are coming to an end of our webinar. I would like to thank Prasanna for the excellent views that he has given. We talked about various use cases, both at the industry level as well as at the bank level in the financial industry space. We also talked about how regulators and industry are coming together to realize some of the potential of blockchain technology. CBDC, some other initiatives by the government, and how it is going to impact the wholesale and the retail users. And I think moving further, it is well established now that blockchain is not something that still people are contemplating whether it is going to work or not. It is very well established that blockchain is going to be the infrastructure of internet in the next 10 years. And I think it's a matter of understanding the technology, designing a solid architecture, understanding a problem, designing a right solution for that, and think of how this technology can be adopted. Yes, we are at very early times, the way we were in early 2000 for internet. We did not know. We know we had something powerful, but we did not know all the ramifications or the ways that we can use technology. I think the same way we are with blockchain right now. And blockchain with amalgamation, with 5G, more peer-to-peer transactions happening. With AI and machine learning, newer models will start happening. With IoT, the whole digital identity within the IoT space, increasing the security of IoT. So blockchain is not going to just revolutionize the trustless ecosystem, but is also going to be working in conjunction with other emerging technologies. With that, I would like to wish everyone a happy and prosperous New Year, holiday season, greetings of the holiday season. Thank you, and see you in 2023 with another webinar. Thank you.
Thank you very much. Happy New Year, everybody. Thank you, Ravi and Paras.
Thanks, Prasanna.
Thanks.
Thanks, everyone. Bye.
Bye-bye. Take care.